Welcome to this Steadyhand video. My name is Tom Bradley, President of Steadyhand Investment Funds. Our purpose today is to introduce you to the manager of our Global Small Cap Equity Fund. I have with me today Magnus Larsson, Portfolio Manager from TimesSquare Capital Management, and our lead manager on our fund. Welcome, Magnus.
Thank you, Tom. It's a real pleasure to be here.
Magnus, you've been working in really small cap investing most of your career. Maybe take us through how that all developed and how you ended up in New York.
Well, it all started my first job working for a small research boutique in Stockholm covering Swedish small caps. I was there for 3 years, moved to London to cover UK and European small caps, ventured back to Scandinavia, this time based in Copenhagen, where I worked for several of the largest Nordic banks in their asset management, at all times focusing on small and mid-cap investments. I got the opportunity to move to TimesSquare Capital in 2012, which basically gave me the opportunity to tie some people that I've known throughout most of my career even closer to me and work directly with them in a setting that was not a big bank, but more of an entrepreneurial company focused solely on small and mid-cap investments, and where the whole organization is geared to that and that only.
Now, Magnus, let's dig into your investment philosophy. What is it that you look for in companies that are going to be in our portfolio?
The starting point is finding companies with the right management. And with the right management, I mean people with vision, that have a clear sense of what they want to do, that have a track record that they demonstrated of success, and an alignment with investors. I particularly don't like fancy option schemes. I like it more when our managers, our management teams, are invested in real equity, because then they're aligned with us and our investors.
So Magnus, and management's important. Beyond that, what are you looking for?
We're looking for a more or less unique business models, companies that are exceptionally good at what they do, very often filling a very small part of a much bigger value chain, but often mission critical. That allows for good pricing power, and we also want our companies to be almost obsessed with innovation, to reinvest in their own growth. That will provide them with a barrier of entry and also to climb what we call the value chain and ever increasing profitability.
Okay, Magnus, let's bring that philosophy to life. Take us through one of the stocks we're going to hold in the portfolio and how you found it, came to the decision to own it in the fund.
Absolutely. Let's talk about Teleperformance. It's a French company, a global operator in what they do. We had followed the company for several years, talking to management, and they had a vision how they wanted to change and evolve the business model. But of course, we don't take anyone's word for granted. We trust, but we verify. They basically wanted to evolve from a call center operator into a much more customer experience-oriented company. They invested in people, they invested in technology. So in the last 10 years, we've been following the stock and owning it and continue to own it. They have more from being a commodity player and just having call centers to today being really the customer experience that you have when you think you're talking to companies like Apple or United Airlines. You're really talking to Teleperformance.
Now, Magnus, you told me a story before we did this about Teleperformance and a highfalutin New York manager that you were talking to last week.
Yes, I was in a recent meeting sharing it with a New Yorker. And in a meeting with the company, he was talking about how he was at New York airport. His flight with United got cancelled, but he got his smartphone up and was chatting online with United and basically got a new flight booked. And he then asked the company, "So why would I ever need you?" And the CFO looked at him and said, "Well, you need to understand, it wasn't actually United you were chatting with."
And Magnus, you've told me before that the competitive dynamic in small cap is different than in large cap.
Absolutely. So first of all, there are much fewer analysts covering each stock. Large caps tend to have 20 plus analysts per name, whereas in small caps it's often 4 or 5, sometimes even none. On top of that, in the small cap space, not only do the analysts tend to cover more number of names than the large cap analysts, they tend to be more junior. Small cap are often seen as an area where you as a newbie out of college, you get to prove yourself, and if you're any good, you get promoted to the also important large caps, which leaves the competition being mainly between us and another handful of specialists like us and local retail investors.
Now, small caps are known to be more volatile, and you're investing in small caps all over the world. How do you manage that and put the portfolio together to deal with that volatility?
Well, that can certainly be the case. The way we try to mitigate it is by investing in companies that have strong balance sheets, so there's less financial leverage. That in itself lowers volatility. We also try to look at the more idiosyncratic volatility, i.e. the individual businesses, and invest in companies that are more structural growers rather than cyclical growers. And thirdly, also very important, is to have a well-diversified portfolio. When you put that trifecta together, it is possible to manage the volatility.
Magnus, about half of the portfolio is invested in the U.S. Will that always be the case? And how is it different between investing in U.S. companies and international companies in the small cap world?
Well, Tom, currently we have more opportunities outside the U.S. market. I think the U.S. market, on average, not the names we have, but generally is at higher valuation multiples. We find simply better value elsewhere. And we have no set limits in terms of, do we have to have exposure to a certain country or sector? No, we will always go where we find the best opportunities.
So Magnus, we have a Steadyhand tradition. You have to go through, it's an initiation. So I'm going to ask you a series of sort of quick snapping questions, and I want you to answer whatever comes to mind. You ready?
I'm ready.
So salmon or herring?
Salmon.
The best thing about Stockholm?
The water.
The water.
Indeed, it's full of water. Little islands, beautiful.
The investor you admire the most?
That would be Peter Bundgaard, one of my earliest mentors based in Copenhagen.
ABBA or Springsteen?
ABBA, of course.
Your childhood hero?
Björn Borg and Ingemar Stenmark.
The book that's on your bedside right now?
Measure What Matters by John Doerr.
How about the most interesting CEO you've met?
Oh, I met many interesting ones. One of the most interesting was I met yesterday, called Juan Vergas from Dometic, a Swedish company.
Your favorite hockey player?
Peter Forsberg.
Peter Forsberg, okay. And favorite New York neighborhood?
That would be Brooklyn.
And finally, your guilty pleasure, Magnus?
Guilty pleasure. I sneak out fishing sometimes.
Magnus, thanks for doing this today. It's been wonderful. We've got to know you a little bit better. And thank you for watching today. Hopefully this has been an informative session, and we look forward to bringing you Steadyhand videos in the future.